Today on the show, I have the pleasure of speaking with Todd Dexheimer. Todd is the CEO of Venture D Properties, and he started investing way back in 2008, mainly focused on single-family and small multi-family flipping. Since then, Todd has purchased and renovated over 500 units. He has completed over 150 flips, including a 20-unit mobile home park, a ski resort, and a 15-unit apartment complex, whilst using the profits to build his own rental portfolio. Currently, Todd owns approximately 350 units located in Minneapolis, Milwaukee, Cincinnati, and Lexington, Kentucky. His focus is on syndicating large value-add multifamily in emerging markets across the United States. To top it all off, Todd is also the host of an up-and-coming new podcast called Pillars of Wealth Creation, which you can find on iTunes or wherever you podcast. I'm really pumped and excited to have him on the show, but enough out of me. Let's get him out here. G'day, Todd. Welcome to the show. How you doing today, mate?
I am doing excellent. Appreciate you having me on.
Hey, man, absolute pleasure. I know you and my business partner, Andrew, have an awesome multifamily mastermind call once a month, I believe it is, and he was telling me a lot about you, so I thought, why not? We're going to get you on the show because I want to pick your brain and get to know Todd a little bit more. But before we do, can you rewind the clock and take us all the way back and tell me how you made your first ever dollar as a kid?
So my first ever dollar as a kid, I think, was probably made mowing lawns. I started a business called Todito, and it was my buddy. His nickname was Dito, and so we combined our names, and that was our lawn mowing business. And I think he mowed like a half a lawn, and I mowed about maybe a handful of them, and that was our business.
Toddito, so Toddito, Toddito.
Right.
Awesome. It's such a great way of making money in the summer, right? Because you're based in, where did you say you're based?
So I'm based in Minneapolis. So we have about 3 months of lawn mowing. That's about it. But it is perfect because it's actually during our school break. So
right. Well, as they say, make hay while the sun shines, right? Yeah. But walk us through your journey of how you got involved in real estate investing. I'm assuming you weren't just born into the sport of real estate investing. So how did you get involved?
Yeah. It was definitely not born there. I was a high school industrial tech teacher and knew that's not what I was going to do the rest of my life. So I had to figure out what to do. I started reading books, and I just kind of happened on. I was always wanting to do something more like entrepreneurial, and I just happened upon some real estate books, and thought, man, this is great. I think I could do this, and just kept on reading and learning. And at the same time, the market had crashed. Just crashed. So that was like 2008 in the U.S. Everything went down. Everybody was running scared. I was super naive. I didn't know any better. All I knew was that when I'm looking at these houses and going, man, I can buy a house or a duplex for between $60,000 and $80,000, and I can rent them for, $1,200 to $1,500. The numbers make sense. And so being naive was great. It allowed me to get into the properties and buy at a fantastic time where, again, most people were telling me I was crazy, but it just made so much sense. So
that's awesome. Walk me through the mindset change that you had to go through, because you mentioned you're a high school teacher. My parents are both high school teachers. My dad was the deputy principal of my high school growing up, so I know what it's like to have a parent coming through the high school system. But, it's such a different way of thinking. And how did you, did you get sick of it? I know a lot of teachers are very passionate about teaching kids, but there's also that sort of the financial aspect of it, which, teachers don't get paid a ton of money, and they get paid even less here in the United States. So how do you sort of grapple with that?
Yeah. So I think I was always wanting to do, so I did the lawn mowing thing when I was a kid. I made custom boxes for my dad's manufacturing company. He didn't own it. He worked there. So I did all these little odd things, and I was working construction, putting myself through college, but I would take side jobs. And so I always kind of liked that idea of being independent.
Mm-hmm.
But yeah, it was like teaching just wasn't for me. It just didn't click. There was some things that I liked. I liked the interaction with the kids that cared to be there. I enjoyed that. But I just didn't like the stuffy kind of school system. It just wasn't me. So I wanted to find something else. I was actually going to become a doctor. And I thought, well, boy, I really don't want to go to school for, all these more years. And, that's going to take forever. And then I'm stuck in this job. And so it was really just reading books, I think, that just was like, really, there's this other life out there. I don't have to be an employee. Like, I don't have to be stuck in a stuffy classroom or in a stuffy, clinic or anything like that. And so that was honestly really it. Books were my mentor. Books were what was like, slapped me in the face and said, look, you can do something else in life.
Right. No, and I think but it's the hunger of wanting to learn more, right? Not everyone just born with just like, oh, I'm going to go out and figure this out. It's sort of, I'm in a safe job, I've got a 401k, and people just go through the motions and just think this is what I'm going to do for the next 40 years of my life. It's, there's more to life than that, right?
Yeah, for me, it was, I don't know, for whatever reason, it was never about like the safety thing. Like I knew you can always make $1, right? So I knew like that was pretty, for me, common sense. I don't know why, but it just was. And I think there was just that desire of like, look, I'm not going to, after my very first year teaching, or maybe it was even during my first year teaching, I remember telling my wife, like, I got to figure out what I'm going to do when I grow up. It's not teaching. So it was very quickly, I was like, I got to figure this out. This is not it. I just went to school for 4 years, 5 years, actually. Don't tell anybody. On a 4-year school. And it just wasn't for me. And it was like, I got to make a change. A lot of people will get caught up in, oh, I went to school for 4 years, so I got to stay in my career. It just, for me, it wasn't worth it.
And you're so right. Like, I went to school for civil engineering, right? And we're forced as, this society of you 17, 18 years old coming out of high school, like, what do you want to be? What do you want to be? What do you want to be? It's like, you're kids, we're kids, right? Everyone's kids. And just like, I don't know what the hell I want to be. And people are so stressed about like being put into a pigeonhole of like, this is what you got to do for the rest of your life. Get a job and be safe and play it safe and get a wife and, get kids and the house and all the kit and caboodle. And then to go and like throw that away, particularly after you've done 4 years and you probably have, debt and all those other stresses that you think I've got to stay here and I've got to make it work. Otherwise all these things are going to happen. And it's these stories that we tell ourselves that are just like, there's more to life, right? And it's awesome to hear that even coming through the high school system and being a teacher, that there was more to life than just, grinding, punching the clock and doing 9 to 5, right?
Yeah. And I think one of the easiest things was I was making $30,000 a year as a teacher. So it's not like I was making a lot of money.
Right.
It's not like it was like, oh, I got to lose this cushy job. It was got to get rid of this $30,000 job.
It's sort of like I'm only at $30,000. How much more can I fall? Right? It's not as if I'm at 300,000 and I've got to come down to. Yeah, no, I get it. Totally get it. So walk me through that first ever deal. Were you doing that whilst being a teacher? You were, okay.
Yeah, so I was still teaching. So I don't know my first deal. I did 3 deals all at once, all within like a month time. So I did a flip. I bought my first rental, and my wife and I bought I think people call it house hacking now. We lived in the property and basically fixed it up while we were living there, and then sold it and basically flipped it while we were living in it. So we bought those 3 all at the same time. And so it was just, to me, do you want to talk about like a particular one? Or?
Yeah. Like talk me about like how you found that first deal, because you mentioned earlier in the piece that they were, you sort of timed the market, coincidentally, that it was sort of at cheaper, properties. And when I first moved to the United States in 2012, I also noticed how cheap properties were just compared to Australia. It's just like the barriers to entry is so much lower. So did you have to go and when you did your house hacking, was it in a worse neighborhood than what you were used to? Like, how did you sort of grapple with all that sort of stuff?
Yeah, sure. So no, I did not buy in a worse neighborhood. It was definitely a different neighborhood than I was used to, because I grew up in the suburbs, where, everybody looks the same and talks the same. And So the first house I bought was in the city, so it was definitely a different demographic than I was used to. But it was not a bad neighborhood by any means. However, it was funny because you talk about the difference of what people's opinions are. People that live in the city, that they don't necessarily, this is maybe going on a tangent, but they don't necessarily understand the city that they're investing in oftentimes, because people think that I've lived here all my life, I know it. That's not the case. So when I was looking at I'll just talk about the house that we lived in. When we bought there, people told us, we had a lot of people that said, don't move there. Like, that's a terrible place. It's a terrible area. Don't move there. And we, it's like, that doesn't make any sense. We're walking around. It's like, it's nice. There's shops. It's really kind of trendy area. And so we just kind of ignored the noise around it and moved in. And that was the case. It was super nice. But back in like the 1990s, it was one of the worst neighborhoods in the city. So people don't understand their own city that they live in. So that's something when you're investing, like, you've got to get beyond the noise and actually learn the neighborhoods you're investing. And that was the same thing with the rental. So the first rental I bought that for, I think, $60,000. And it was in a neighborhood called North Minneapolis, the north side. And the North Minneapolis is where all the murders are, and all the crime happens. That's the D neighborhood. However, that's only a small section of North Minneapolis, and where I bought was on like the very upper part of North, and it's actually a pretty nice neighborhood. I would live there. But the noise told you, don't even think about it. Like, don't do it.
Yep.
But it was the boots on the ground, like getting to know these neighborhoods, looking at the crime maps and going, well, really, I don't know what people are talking about. This is really good. And that was the same thing about like just buying, period. People are like, don't buy real estate. It's crazy. You're stupid. And I'm going, well, I can buy a house for $60,000 and can rent for $1,400. Doesn't seem stupid to me. Like, I'm going to buy it.
Yeah. No, I think move above the noise, and people are so fixated on the blinker system, right? They've got these blinkers on, and they just, I've lived here all my life and that's always been a bad neighborhood. Well, the fact is, cost of living's going up and you've got to find new neighborhoods to live in. That's called gentrification, right? And that's sort of, you might have been in front of the curve. How have those houses gone since then? I assume we're in 2018, so we're nearly 10 years later. I'm assuming pretty well, right?
Yeah. So, I mean, I actually own a couple in the neighborhood that I live in still. The first house that I bought that my wife and I lived in, we sold, and then we bought another one just in the same block and did the same thing with, when we sold that. So I think the first house we bought for like 140,000. The second house, when we sold it for like almost 350, and now it's probably closer to 400 easily.
Wow. And that's in what a 9 to 10 year horizon, right? Yeah. So all those haters out there were telling you don't move into those neighborhoods. It's like, hey man, the proof's in the pudding. What can I say? So
yeah. And quite frankly, if we would have kept that house, which I was actually tempted to, the second house that we did, I think in another 10 years, it'll be easily over 500,000. The neighborhood just keeps on getting better.
Wow.
Getting better.
That's a huge lesson for anyone listening out there. It's like, I know you time the market well, but in terms of growth, what advice can you give to those people who may be affected by the noise when looking to get in their first deal?
Well, I think listen to the noise and then go to those areas that the noise tells you to stay away from, honestly.
Yep.
And it doesn't mean invest there, because sometimes the noise is correct, right? Sometimes that bad neighborhood is truly bad, but then just go out to the fringes and just kind of work your way around it and try to find that neighborhood where you go, this is not bad. And then you can start talking to the people that live there, talking to the people that are, own a shop there. You can kind of tell, like this neighborhood that I lived in, it was, there's all these trendy bars and restaurants and stuff like that moving in. And so you could really see it. And like literally right now, a block from where I live, they're building a brand new mixed use, beautiful building. 3 blocks from there, they're building another really nice building. So stuff like that is happening. I would say, listen to the noise, and then go hunt where the noise tells you to stay away from.
Love it.
And it doesn't, like I said, doesn't mean buy there, because sometimes the noise is right. So you still got to do your homework, but that's oftentimes where there's great opportunity.
That's really good advice. Listen to the noise, go there and check it out for yourself. And I assume, just by what you're saying is look for the trends, look for those trendy bars, try to look for, things that are changing in the neighborhoods. Do you have any other tips of what you like to look for when you go into a noise related area?
Yeah, I would say a huge one is, are there art studios? Like, are there art kids? Anytime you see like that, are there the, kind of the edgy type young hipster kids,
the outcasts of the school, right?
If you're seeing them there's a good chance that neighborhood's going to gentrify. It's funny, but that happens. I got another property in a different neighborhood. It's exactly the same way. I wish I would have bought 1,000 of them there. It's just crazy.
Espresso bars and yoga studios, right? It's probably gone too far the other way. If that's the point, if you're getting yoga pants coming around, it's gone, right?
Probably when it gets, that is already too late. But yeah, I mean, that's look for just little keys, like just that little stuff where you go, oh, okay. And you know what? Here's the thing. Here's my philosophy is, if you find a neighborhood and you kind of see that trend happening and you buy there and you miss and it doesn't go that way, as long as you bought right, you're going to be okay. If you bought for cash flow, if you follow the fundamentals of real estate investing, if you buy for cash flow, not just appreciation, and you manage right and do all that kind of stuff, maybe it's not going to be a home run that you thought it was, but at least you're going to get out with some cash flow, and eventually you're going to be able to just get out and be just fine. So.
And I think the big thing is everyone tries to look for that home run, and we're talking about, in your case, it's gone from 60,000 to 300 to potentially now even over $500,000 in 10 years. That's a home run, but it's not all about home runs. It's also about just getting on base, right? Just base hits. And you may choose a neighborhood that's not going to give you a home run, but it's giving you a couple of base hits and giving you, money in your pocket that you can potentially quit your day job because become financially free. That's a win. That's a win in my book, right?
Yeah,
so
it's all, you still have to follow like I said, you still have to follow the fundamentals of real estate investing. Like if you don't, you could get lucky, but eventually you're going to get burned and potentially lose it all. So
right. So, mate, in the green room before we started recording, I asked you what you're most passionate about when it comes to real estate investing, and you said the chase, and I've written it down here, the chase of the deal. So, walk me through how you've evolved as a real estate entrepreneur and investor since way back when you were a school teacher to what you are now, and how that chase has changed for you in terms of maybe your systems or what you look at, because we've talked a little bit about like the neighborhoods and what you're identifying. But now, what gets you out of bed? What are the juices that the chase enables you to get excited about?
Yeah, that's a big question. There's
sure.
Yeah, I mean, prior to it was just like I'm just looking for properties that make sense and whatever, and there wasn't a ton of method to the madness. It was just, does this thing cash flow?
Right.
And that was honestly almost the only thing. And am I going to get shot there or not? So that was like the major thing. Now I'm looking at more the whole picture of the property, of the city, of the, what is going on. I'm looking at, the jobs that are coming in, how many jobs are coming in, the type of jobs that are coming in, what they're paying, what position they are. What's the growth and where are the growth trends? Every city has growth trends, right? Every single city is growing, from downtown out to the west, or maybe from the west into the downtown, or whatever. Every city's got the major growth corridors, and then it's got some other corridors that maybe are growing too, but not to as much of an extent. So where are the growth corridors? You really want to try to focus on those. And then where are the opportunity corridors too? That's the other thing. Sometimes the growth corridors, maybe the opportunity, everybody knows too much about it already, and you can try to pin into something else that has some opportunity. And it really depends on how much, what's your investment strategy too? Is it just, hey, I'm going to come in and make cash flow, or do I want to have potential home runs, knowing that at least I'm going to get base hits? And that's kind of what I look at. I want potential home runs, knowing that I'm going to for sure get a base hit
at some point, right?
Yeah, I mean, like I said, every time I buy, I look at the fundamentals of real estate. What am I going to buy? And I'm trying to buy in those neighborhoods that I could, if everything goes right, have this great home run grand slam. Right. But if it doesn't happen, I'm still happy, completely happy with my real estate investment. So that's kind of the change in the models, and I look a lot at rent affordability now compared to the market. Can my tenants actually afford to live there? If I'm going to be raising rents, is that going to put pressure on them too much, to where if a recession hits, they're not going to be able to afford the place? All that kind of stuff. So I don't know, did that answer your question?
No, that's great. It's completely great. But what I want to now dive into a little bit about your tapestry of skills, right? You started, I mentioned in the beginning, you started with single family. You're now into multifamily. You've done a ski resort. I'd love to ask a little bit about what did you do there? But the different tools you now have developed in your tool bag over the years. What are you looking just for one specific thing, or are you looking to do a little bit of flipping still, a little bit of multi, or where's the strategy moving to in the next, say, 5 to 10 years?
Yeah. So I'm not looking to do flipping. If I had a flip opportunity, I would potentially take it, but I would have a partner that was going to be involved in the whole thing. So I definitely am not into the flipping game anymore. It just wasn't where I wanted to be. It actually, honestly, never really was. I did it out of necessity.
Mm-hmm.
And then we could talk about that, but so right now the main focus is multifamily syndication. And then it's also building a business that's more vertically integrated, where I've got all the systems in place, where I'm trying to build things that are going to feed off of each other in the multifamily syndication space. So
that's awesome. What sort of things are you doing to make it more vertically integrated, or create that ecosystem of businesses to be complementary to one another?
Sure. So like right now, I've always had a construction business, but I've never really ramped it up. So right now I'm ramping up the construction business very, very systematically, though. I don't want to be involved in most of the day-to-day, because I want to be involved day-to-day in finding multifamily and still the multifamily. But I'm building teams out to be able to have that as part of the system. With real estate, with the economy, I should say, with anything business, it's cyclical, right? And so what I want to find and what I'm working on is businesses that complement the whole picture, which is multifamily, acquisition and operation. But I want to find and develop businesses that work well in different market cycles. For instance, when's the best time to buy multifamily? Well, there's, you can buy in any part of the cycle, and I still do, but the best time to buy is at the bottom of the cycle. When's the best time to be a contractor? Well, the best time is at the top of the cycle. So those are two businesses that work well with each other, where when I'm in full-blown acquisition mode, trying to buy every single piece of property that hits the market, that's going to be at the down cycle. My construction company is going to feed into that and be working on those properties, where when we're slowing down, cash flowing, but maybe not buying as many deals, my construction company is going to be really ramped up and working on more retail stuff. And so just things that kind of ebb and flow with each other and consistently work in all kinds of market cycles.
No, that's you bring up a really good point, and something that I'm hugely passionate about, which is business ecosystems and vertically integrated. Some of the stuff we do, I think Andrew might have spoken to you about. We've just got a whole shipment from China of all this stuff that we just bought, because I want to go to Home Depot. But with your construction construction company, maybe walk me through what team are you setting up in order to be profitable, and how are you paying yourself right now on your current deals in order to keep mouths fed and food on the table for essentially your employees, because that's what you're getting into, right? You're getting into potentially a liability that you've got payroll to make if you have a construction management company.
Yeah, so starting out, most of it's going to be not employees. The construction industry is really good because you can have a lot of subcontractors. So most of them are going to start out as subcontractors. I already do have a few employees, but most of that's going to be subcontractors, and then commission based. So I'm going to have real estate agents involved, because we're going to be, our niche is working with home owners that are going to be selling their house, whether it's tomorrow or maybe a year down the road, whatever it is. We're working with them to maximize the value of their home. So it's going to be realtors that are going to be involved in helping sell the business, and then really the only, I shouldn't say the only, but the main person I'm going to have to worry about, can we take care of, is going to be the estimator, and kind of the person that's going to be going to the job, giving the exact price, and then making sure the materials. So project manager, whatever you want to call it.
Right.
So that's the main person that's going to be involved in the business. Now, again, this is like pretty infancy stages, so I haven't completely decided exactly how I want to do it, whether it's some commission along with some salary, or exactly how we're going to do it. But yeah, that's an important thing. And that's what I think about a lot, is I don't want to just hire somebody day one and be paying them, $70,000 a year salary, and then all of a sudden have no work coming in.
Right.
So you got to be careful with, how you start that business when you've got an employee that you almost need right away.
Right. Well, I think the big thing, and definitely something we've focused or spoken about and looked at, because of my construction background, like I know that I'm paying a GC right now, and I'm probably paying him a little bit too much. He's making money off me, but yeah, do I want to go out and hire an employee straight away? And I think the way that I've thought about it or strategized is like, okay, I've got enough volume, or, as maybe you do, to get them started cutting their teeth on the multifamily stuff, where it can just be like, okay, you're just going to be a project manager on site, make sure the GC comes up and does his work. And then from there, potentially wheel them off into this new biz, which is, talking about commission-based and helping sellers with, and maybe that's a good just stepping stone, rather than just like, oh gosh, I've got the $75,000 employee, I've got no work for him to do right this second. So yeah, maybe something like that. Do you have active projects with your multifamily stuff that he or she could jump right into right now?
So most of my multifamily right now, the acquisitions are mostly out of state.
Got it.
I do have some projects, that like I'm selling some of my properties, or we're always doing some renovations to them. So we do have always some work. But yeah, the key for me right now with this whole business model is I'm really focusing on building a business that can be sellable in the future and can sustain without me. Because to me, that's like the most important part. When I started my real estate business, that wasn't even a thought. Like, it was just, I was hammering through it. But I think as you grow, it's how can I build this thing to be an asset in the future? And so with this construction company, it's, most construction companies out there, I bet 99% of them, they can never sell. They're worth what their equipment's worth, honestly.
Yeah. Or what the main project manager's worth, right? Like if he goes somewhere else, your business is useless.
That's just it, and so you want to build a business that somebody can just come in and buy, and they don't have to be the one keeping the wheels spinning. That business is already spinning. So if you could have revenue coming in without the CEO being involved, that's to me, the best way to build that business. It's a great business model. And it's that residual income that we always talk about and want. So
Yep. So what strategies have you been thinking about to try and create that foundation of that business in order to have that future goal of selling it in 10, 15 years time?
Yeah. So, I mean, first it comes down to people, who are the people that you can put in place? And then it's also the processes, what kind of processes can we put in place? So everything that I'm going to do today is going to be completely written down into job descriptions and all that kind of stuff. So what are the people and the processes, I think is really, really critical to, how you're going to do it. And then obviously the vision behind the company is extremely important too. I think that's going to drive the whole business. So I think, those are probably the biggest key critical factors coming into it. Obviously there's lots of little nuances. I mean, I've got like pages. I like to write everything down instead of typing. So I've got like pages and pages of like chicken scratches I could, kind of go through, but it's like, I've got flow charts of, how are we going to do, who are the people involved, what are their tasks, and how is everything going to kind of flow together to make it profitable. And
That's
I think
awesome.
it's a really important exercise to anybody doing, whether they're wanting to get into multifamily or really anything, any kind of real estate or any kind of businesses. What's this thing going to look like from a high level all the way down to the low level. So.
Yeah, no, I think it's incredibly important to write that stuff down. And because, you're figuring it out, I'm figuring it out, we're all sort of, as entrepreneurs, just figuring it out, right? We don't know the answers straight away. So the thing is sort of you try and strategize as best you can and give it a crack, and you'll learn along the way. And as all of a sudden it starts like that snowball going down the hill, and it gets into hopefully something that you can sell or even just step away from in the future, and you're not reliant upon you steering the ship. It's pretty freaking awesome. Wanted to quickly dive into your ski resort. I just noticed on the notes. How did you come across this ski resort? And I take it you're a skier yourself, and walk us through that story.
So I am a skier myself, but it has nothing to do with how we found the ski resort. So I used to have a business partner, and so both of us are big into hunting, deer hunting. And so he was actually walking another property that he had some hunting rights on, and stumbled across this property and noticed like all the deer were at this property. So he went to talk to the property owner, and as he was like going to this owner's place, he's like, this is like this huge like resort thing. There's chairlifts everywhere. Like, what's going on? And so then he talks to this guy, and it talks to him about the hunting, but then talks to him about this property. And so that's kind of honestly how it came about. Just stumbling on this property. And it was perfect timing. The guy had advertised it for sale a long, long time ago for a lot more than what we ended up buying for. It was perfect timing because this is just how things work in real estate, and why it's like important to constantly be on top of things and constantly like never give up on a deal. Because so this guy was driving his mom to the Mayo Clinic, which is close by this property. It's a big hospital. People haven't heard of the Mayo Clinic. And anyway, so he's driving her there, and they drive by this barn, and it's like falling down, and the roof's, everything's decayed. And she goes, "Oh, it's so sad. I remember that barn when it was really nice." And he looks at her and goes, "Mom, that's going to be our place. That's this ski resort. That's going to be our place soon." And she's like, "You're right. Let's sell it." So that was like a day before we walked and started talking to this guy.
That's awesome.
So it was like perfect timing. Ended up working a deal with this guy, and then bought the property with $0 out of our pocket. We got a bank to finance 100% of the purchase because we bought it. I can't remember the exact price. Let's call it $450.
Wow.
It appraised for $900,000.
Wow.
975 or something like that. So
that's incredible.
Buying it, yeah.
And is this a fully functioning resort now? Is it?
Yeah,
do you ski and got black runs and all that sort of stuff?
So it's a Minnesota resort. Okay, so if anybody's been to Minnesota, we don't have mountains here. So it's little like hills. So in the mountains, this would be like a bunny hill.
Got it. Okay.
But for Minnesota people, it's exciting.
Mm-hmm.
So it was not operating. It had all the lifts still there. It had all the stuff, the pumps, everything to make snow, all that stuff. But it hadn't been running for about 5 years. So everything was going to need a lot of service and a lot of work. And that's why we got it for such a good price. The building was not falling apart, but was going to be soon. The roof needed to be replaced like day one.
Mm-hmm.
his siding needed a lot of attention. A lot of stuff needed attention. So from day one, we had to put some money into it. Not a ton, but just some major like things that would be happening to the property soon if we didn't touch it. So, but yeah, we never actually got it operational. Before we did that, we ended up selling it. So we flipped it.
Wow.
Yeah.
So is it now operational or is it something completely different?
So now the guy, he's actually doing really good. He actually invited me down there. We might go down there this weekend. He's got a wedding and event center out of the old ski resort. He made it really nice, and he's doing really well. He's can charge a lot of money for these weddings, and I think he's got one ski lift operational. So people come there, they get to ride the lift, like the bride and groom ride the lift, and take pictures and stuff. And he holds races there, and he's got like this weekend he's got some, 4-wheeler race thing going on there. And so he does all kinds of stuff like that. And he's toyed with the idea of getting the ski resort up, but it just, in Minnesota, they don't make a lot of money.
Right. Yeah. I could imagine a ski resort, I've been to many of them, and it's very heavily operationally expensive. You've got a lot of employees to make it work, a lot of marketing dollars to make it cool and hip and all that sort of stuff, and build a half pipe and all that jazz, to get people in the door and, get liquor licenses, and it's the whole shebang. But how many acres was it?
Oh, I think it's 172.
Oh wow! So it's a decent size. It's not small.
Decent size, yeah.
Yeah, that's great. That's fantastic. Well, mate, look, I really appreciate you coming on the show to share your insights. But before we part ways, are you ready to give me your top 5 investing tips?
Yeah.
I'm going to walk you through them, mate. What is the daily habit you practice to keep on track towards your goals?
Yeah, there's a few things, but I guess one of the main things would be I time block. So everything is written down. I mean, I've got my calendar. I write it down, by the hour or whatever it is. And so everything's very time blocked. And I do sometimes get messed up off that time, but I try to keep to it as much as I can and really focus on my day. So that would be one of them. The other thing that I've done is I read the book called The 12-Week Year, I think it's called.
Yeah.
You read that?
I haven't read it, but I've heard of it.
So it's great. And so now that's how everything's blocked out is my year is 12 weeks. And so I have my set, goals, and everything on my time block, everything on my week is based on achieving my 12 weeks. So it's just that mind shift change of, because you get all these big year goals, and it's so easy to put them to the side because January 1st is a long time from January 1st,
the next year,
right? So it's like it's easy to push them off, and with 12 weeks, it's just a lot quicker, and you've got to hold yourself more accountable and only focus. That's the other thing. Focus on just a couple things. Because in 12 weeks, we know we can't achieve like everything. So let's just focus on a few things.
And I think it's really important and I'm a victim to it. You set these goals out and then they just end up dragging out for like 12 months or longer. You just got to get in and get it done. It forces you to like, come on, get it done, and don't be shiny object syndrome. And like, oh, well, there's that thing I could start, or there's that thing I could start. Being really, really focused. Second question: who is the most influential person in your career to date?
Boy, that one's tough. I mean, as far as I got to say, my wife. I mean, she's been like a complete blessing on me. She allowed me to quit my job and just supported me there, and takes care of the kids when I need her to. She's just an awesome support. So she's got to be the number one.
That's awesome.
Yeah.
That's awesome. What is the most influential tool in your real estate business, whether it be software or a hardware that you really can't not have in your day-to-day business?
Wow, that's a tough one.
I've had people say like their phone because their phone is always ringing.
Yeah, sometimes that's a nuisance though, isn't it?
Yeah, right.
Um, you're kind of stumping me here, but I'm going to just, I'll come up with probably a better answer after we're done, but I'm just going to say, you know, my syndicator, I guess, analysis spreadsheet, which is just an Excel document that I've
Yep.
created. But that I use that almost every single day because I'm underwriting deals all the time. So I
Right.
would say that's been huge. You know, there's other things that are definitely helpful, like MailChimp has been very helpful, and yeah, I'm sure there's other things.
No, that's great. No, 'cause I think having something that is systemized and you understand it, and building out spreadsheets. I know when I talk to guys about underwriting, like I always encourage them to build their own spreadsheet because then they can understand the nuances of it. And then not just rely on someone else's spreadsheet that, oh, the numbers turn green, so it means it's a good deal, right? So it's
Yeah, and you know why, right?
right.
And with your own spreadsheet, you know why.
You know where the bugs are. You know how to find the bugs, and weed them out and make sure. Okay, well, this is why my spreadsheet is flexing so hard or not flexing enough, and I can tweak it. So
Yeah.
so good stuff. What has been the biggest failure in your career to date, and what did you learn from that failure?
Yeah, I mean, there's been plenty of them. Can I mention two?
Yeah, mention as many as you want.
All right. So one would be trusting people and not putting things into contracts. Just trusting that everybody's good, and I'm that's kind of who I am. Everybody to me is good, but I've gotten burned on that. I lost $70,000 on a deal not by just trusting somebody and not actually getting it into writing. So that would be number one. Number two is not going big sooner.
Sure.
So
And does that just mean a transition into syndication or from your
yeah,
single family?
right. Transitioning into multifamily syndication. It honestly, like, things are good, right? And I enjoy my life and I enjoy my business. But looking back, it's like, hey, you didn't need to take the training wheels off, after I rode my training wheels for, 8 years. I didn't need to wait 8 years to, take them off.
It's hindsight, man. It's you always beat yourself up. You're sometimes
Yeah,
we're our worst enemy, right?
right. And I don't know necessarily that I beat myself off. I just beat myself, sorry, beat myself up. Uh, but it's just like, it's a lesson I've now learned moving forward of, hey, you don't have to wait forever to graduate. Like the next time or the next, like this, I'm looking at this construction business. Like I'm not going to start little. It's not
Mm-hmm.
even like that's not even, if I'm going to start little, I'm not going to do it. So
Right.
now it's like, okay, let's look at the whole picture. And so it made me just, not that I regret it, but it made me learn like you don't need to wait forever to get started, to get to where you want to be.
Right. I remember a mentor of mine saying to me, the traffic lights are not always going to be green at the same time, right? And you can't always wait for that, for the whole string of lights to be green to, okay, now I can go, right? Because but on the same token is, for those people listening out there who've never done it, make sure you have the training wheels on for a little bit because otherwise you don't make a stupid mistake. It's just sort of that fine line between not waiting too long, maybe in your case, and then other people going too quickly. But there's that balance and understanding now that your mindset it's fantastic. That, as you said, I'm not going to start this construction company if it's not worth my time getting out of bed. I'm not going to go big straight away because what the hell? Why not aim for the stars, right? Because if you fall short, then you did a pretty bloody good job, right? So. Yeah. Mate, and last question for you. Where can people reach you if they want to continue the conversation, they want to learn a little bit more about what you do and be just in your sphere?
Yeah. So they can. You already mentioned the Pillars of Wealth Creation. They can check me out there, pillarsofwealthcreation.com, or go on to whatever, iTunes, Stitcher, wherever they're listening to this. And then they can go onto my website. My business website is VentureDProperties.com. Is D as in Dexheimer or dog. VentureDProperties.com. .com, and my email is todd@venturedproperties.com.
Awesome stuff, man. Well, I want to thank you for dropping by today. You certainly provided us some cracking information, and just some of the big three takeaways that I took away from this conversation today are, just to summarize, is I think the first one right at the beginning of the show, where you said you can always make $1, and that mindset of taking you out of teaching and knowing that you can always make $1, or you have a fallback scenario from, I think what I'm hearing from you is that you want to give it a crack. Otherwise, rather than just sit there and play, whatever life it is, you want to give it a go. And if you fail, well, I can always go back and make $1 somewhere else. The second one was move above the noise. I think that's so important when you're hunting for deals. Even when you're getting started, like I'm sure people were sort of saying to you when you got started in real estate and quitting your jobs, like, oh, you don't want to quit your teaching job, the safe thing, blah, blah, blah. But moving above the noise and then going towards the noise when it comes to finding real estate deals and checking it out for yourself. And then the last one, I just did what you just said about the failure, trusting people too quickly and not having it in writing. I think a lot of people, it's a commonality between a lot of entrepreneurs when they get started. They're so focused on trying to, get it going and get to the next point and don't look at the small stuff, which can hurt, which can bite them in the butt, in years to come if things don't go well. So, did I capture everything? Is that good?
Absolutely, that's good.
All right, man. Well,
I love the phrases you use. They're great.
Kraken's a good one, because I always it's Kraken deal, and it's very Australian, but got to lean in when you can, right? Well, mate, thank you so much for dropping by. Enjoy the rest of your week, and we'll catch up soon.
Absolutely. Appreciate you having me on.
Well, there you have it, guys. Another cracking episode, jam-packed with some incredible advice from Todd. Make sure you do check out his podcast on iTunes, and make sure you hit him up if you ever have any questions about getting started in multifamily syndication, or if you want to ever buy a ski resort, make sure you hit up Todd. He's probably the expert on buying ski resorts. You can also check out all the show notes on my website at readgoossens.com. Thank you again for taking some time out of your day to tune in to continue to grow your financial IQ, because that's what we're all about here on this show. And we're going to do it all again next week, so take care. Be safe, and remember, happy investing.